Good afternoon, everybody, or good morning, or good evening, depending on where you are in the world. It's currently just gone 1 p.m. here in the United Kingdom. My name is Gavin Holmes. I'm the author of Trading in the Shadow of the Smart Money. And today's very special webinar is part of a three-part webinar we're doing on the Forex and the currencies market specifically. And I'm doing this because I've had so many emails from our customers asking me to do a specialist seminar on how to trade the currencies. So today I'm joined by three traders. The first is Tom Williams, who is the inventor of volume spread analysis. He's now 84. He lives in Worthing in the south of England, and he loves to trade Forex, so we'll be able to hear from Tom about what some of his favorite setups are. We've got some live charts to actually show you, so you'll be able to see those as well. I'm also joined by Richard Dingsdale, okay, who should be in the room now. Let's just do a sound check. Richard, are you there?
Yes, sir, I'm here.
Good stuff. Great. So Richard's there. If you could just mute your mic a second for me, Richard, that would be great. I'm also joined by Rita Offen. And Rita has been trading now for a number of years, but she was personally taught by Tom Williams. Tom affectionately just says she's, with respect, just a housewife, but she works extremely hard. But one of her favorite trade setups appeared in the Euro a couple of days ago. It's called the upthrust. And indeed, it marked the price down on the Euro, ready for today's shakeout. Now, a couple of things before we start. A week or two ago, I sent an email out to our database explaining that the markets are manipulated, and in fact, the Federal Reserve 4 times a month put in large amounts of money into the market to ensure that the stock market is propped up. And in fact, we did a live trading session yesterday, a mentorship course, where we watched the S&P decline about 20 points in about three or 4 hours. And we traded it short. We also traded the Australian dollar. Now, we knew in advance that that move was coming. And we knew in advance that we were going to have a big move today because we have a news announcement. But as you'll hear from Tom, it's not the news that drives the markets. It's the smart money who trade the markets. And they know full well in advance what the news is, days ago possibly, before it's released to the general public. Before I get going, can I ask a question? How many of you here are new? This is your first Trade Guider seminar. Can you just type in N for new if this is your first Trade Guider webinar? Just N for new if this is your first Trade Guider seminar. I just want to see if you're new. So just type in N for new so I can cover some basics for those that are new to this. Okay, some of you are regulars, I can see that. Some of you, okay, so there's a few of you that are completely new. All right, great. Well, welcome to those of you that typed in new. Let me start by explaining what we're going to talk about today. We're going to talk about volume spread analysis in the Forex market. Now, most of you who trade Forex will probably be thinking, well, that you can't use volume in the Forex market. But that's completely untrue. Hello, Wojciech, nice to see you as well. So what we're going to talk about is volume spread analysis. Most traders are aware of the two widely known approaches used to analyze a market: fundamental analysis and technical analysis. Many different methods can be used in each approach, but generally speaking, fundamental analysis is concerned with the question of why something in the market will happen. And technical analysis attempts to answer the question of when something will happen. Volume spread analysis, however, is a third approach to analyzing a market. It combines the best of both fundamental and technical analysis into a singular approach that answers both questions of why and when simultaneously. At its core, volume spread analysis, or we'll refer to it as VSA, is a methodology based on the original works and teachings of Richard D. Wyckoff, a trader in the early 1900s. The methodology seeks to establish the cause of price movement on a chart. The cause is simply the imbalance of supply and demand as the market trades, resulting in strength or weakness in the market being charted. For the correct analysis of volume, you need to understand that the recorded volume contains only half the knowledge required for a correct analysis. The other half of the knowledge is found when observing the spread or range of the price bar and the closing price on that bar. Volume indicates the amount of activity on the price bar, and the spread or range of the bar shows what the price actually did and most importantly, where the price actually closed. Volume, spread, analysis, or VSA. Volume is activity. That's all we need to understand in the Forex market. It's activity. Today we see very high activity on the news release from the ECB. Then we have the spread of the bar, not to be confused with the big ask, the bid or the ask spread. This is simply the range of the bar in any time frame. We could be analyzing a daily bar, a weekly bar, or a 1 minute bar. It doesn't matter. The markets all move on the universal law of supply and demand. But the market works and continues to work today because of human beings who trade it. They have two powerful emotions that they have difficulty controlling: fear and greed. Tom Williams said, the market has to be fed losers. It is devious, and what you hear will often not be the truth. I've never heard the truth about the stock market or any market on television. Just look at the news about the oil market in May 2008. Greed at the top, as many traders piled in because they were told oil had to go to $200 a barrel. The chart never lies. And Gavin went onto YouTube to show the end of a rising market. And of course, we now know oil fell to $133 a barrel in 6 months. Then look at the banking sector in 2008 during September. Fear set in. Professional money began to buy into the bad news, not sell. And that caused stocks like Goldman Sachs, for instance, to rally 400%. It's all in the chart if you know how to analyze supply and demand, says Tom. So how can volume identify these moves? Volume spread analysis identifies these moves because, as I said earlier, volume is activity. That's what you've got to keep in mind. Volume is activity. We are interested in volume because it tells us the consensus of opinion amongst the smart money. The spread and the closing price in relation to the background, as you will see, confirm it. So what actually causes the price to move on the chart? Well, I can assure you the past price, which is what 99% of retail traders are analyzing, does not cause the future price to move at all. The price movement is caused by the activity, either the buying or selling, of smart money. This cannot be seen by just analyzing the past price using a technical indicator. It's vital to look at more than one time frame on any chart and to look very closely at volume, as we will now see. So how do we know when the smart money are buying and selling? Well, first of all, volume is the gasoline that drives the financial market. It is the key to the truth. Two very important points you must always remember when analyzing your charts. Point number one, volume is activity. As an estimate, about 85 to 90% of the volume seen on the charts will be from the large funds, George Soros's fund, the Quantum Fund, institutional banks such as Goldman, and professional trading syndicates or pools who are very secretive. In fact, they're nameless. And indeed, Tom Williams, who's sitting next to me, worked for one of those syndicates in Beverly Hills, California, and he'll tell you a bit about that shortly. Ultra high volume and ultra low volume, seen in the right place, in context with the background, are signals from the smart money of their true intentions. And these opportunities often arrive on earnings reports, or in today's case, news events. There are 4 laws, I believe, that govern the markets and whether you're going to make money in the market. The law of supply and demand. Many people take that for granted. They say, well, yes, Gavin, tell us something new. The markets, of course, it moves on supply and demand, but they don't actually understand what it means. The second law is the law of cause and effect. What causes price to move? What effect does it have on the chart? The third law is the law of effort versus result. That shows us on massive volume, what did the price actually do? Did it go up or down? The fourth law, the law of attraction, is all about belief. Understanding that you will make money in the market if you believe in your ability to do so. If you doubt yourself, you will not make money in the market, I promise you. Now, will volume spread analysis work in all markets, including spot Forex, where apparently there's no volume? The answer is yes, as I'm going to prove to you beyond reasonable doubt today. Now, I'm a former police officer in England turned trader, and I can assure you that if I can learn this stuff, and I have an IQ of about 25, so I'm told, then anyone can do this. It can be done. But you must put in a little bit of work, and you must believe in your ability to make money. We are going to look at some live charts shortly. Just bear with me. I've got to explain these basics to you because it's important. Now, the biggest market in the world by far is the spot forex or the currency futures markets. The amount that's traded is in the trillions of dollars every single week. And, you know, when we look at trillions of dollars, we can't get our head around that number. But it's a very liquid market and a very trending market, which is what makes it very attractive to trade. Also, you don't necessarily need a very large account to trade the spot forex market. It's called the OTC, over-the-counter market. Let me ask you all a question. Just type in yes or no. How many of you here are currently trading forex or currency futures? Okay, I'm just counting how many. So far, about 70% have said yes. Hey, Sam. Sam Abbey, just saw you. Nice to see you. Okay, so most of you here are currently trading forex. Not particularly surprising. Well, what are you actually trading? Because when you're trading in stocks, you're buying and selling a stock. But in a commodity like gold, unless you're trading the futures, you're not. You know, you're actually trading a commodity. But in forex, you're actually just trading money. And actually, what are you buying? Well, you're not buying anything physical, so this can be confusing to many new traders coming into this market. Think of buying a currency as buying a share in a particular country, like buying stocks of a particular company. The price of the currency is a direct reflection of what the market thinks about the current and future health of, let's say, the Eurozone. When you buy, say, the euro, you're basically buying a share in the Eurozone economy. You're betting that the Eurozone economy is doing well and will get even better as time passes. Once you sell those shares back to the market, if you want to call them that, you end up with a profit or a loss. In general, the exchange rate of a currency versus other currencies is a reflection of the condition of that country's economy compared to other countries' economies. The main currency pairs, I like to trade the Aussie dollar and the euro and the pound, but all of these are the most active. These are the top 8 most actively traded currency pairs. And they have nicknames. You've got the euro dollar, the dollar yen, the pound dollar is called the cable. We call that cable. This is the Swiss. We call it the Swissy. The US dollar Canada is called the loonie. The Aussie is called the Aussie dollar, obviously. And then you've got the Kiwi. Those are the main pairs that people trade. The top one tends to be the euro and the US dollar. So what's the difference between spot forex and currency futures? Well, first of all, unlike other financial markets like the New York Stock Exchange and CME Group, the spot FX market has neither a physical location nor a central exchange. The currency futures market does have a centralized exchange. Its home is in Chicago, where I used to live. It's called the CME Group, or the Chicago Mercantile Exchange. The spot forex market is considered an over-the-counter, or OTC, or interbank market, due to the fact that the entire market is run electronically within a network of banks continuously over a 24-hour period. The spot forex market is spread all over the globe with no central location. The forex over-the-counter market is by far the biggest and most popular financial market in the world, traded globally by a large number of individuals and organizations. In the OTC market, participants determine who they want to trade with depending on trading conditions, attractiveness of prices, and reputation of the trading counterpart. We'll show you the topmost 10 actively traded currencies. I've got a chart to show you there. And as you'll see here, in fact, the dollar, as I'm going to show you, is by far the most active currency and actually leads the forex market. So volume is activity. 85 to 90% of the volume seen in trades from the smart money. They move the market. In forex, we analyze tick volume, which I'm going to get Tom to explain in a minute. Now, as part of the course I'm doing, I'm providing a fact sheet which explains exactly how this works. So let me read, first of all, from the forex fact sheet. I think this sums it up quite nicely. An explanation of how and why Trade Guider detects professional activity, as I'll call it, in the forex markets. Although many people think there's no volume in forex, eSignal produce a volume histogram with their forex data. How is this done? Well, you can find a lot more by going to that link. Where does eSignal, who I use for forex data, get its data from? The Forex comes from GTIS, an affiliate of FT Interactive. Basically, in summary of this paragraph, they use 200 interbank feeds, okay, to produce a volume histogram. So you see a volume histogram in Forex, in eSignal, and of course we get that in TradeGuider. What does the volume represent? The volume for Forex represents the number of transactions or ticks, and not true trade size activity. It's much like most futures contracts where the volume histogram reflects the volume of transactions or updates during each given interval. It's important to understand that TradeGuider does not need actual traded volume, but relative volume compared to the previous bar to give a VSA indicator. Volume in Forex can be seen as activity, and that is the activity that TradeGuider picks up extremely well when using eSignal. And then here is an explanation from Tom, but actually I'll read it and then get Tom to elaborate. First of all, you have to realize that the smart money or professional money is very active in the Forex market, as we've seen today. Professional money, as we shall refer to it here, can be trading syndicates, individual traders with huge capital, large financial institutions, certain funds such as the Quantum Fund operated by Soros, or large institutional banks. There is actually a link here which is in the newsletter, which explains how the markets are manipulated. That's 12 years old, that letter, still available, still very interesting to read. So these individuals or organizations are very secret in their dealings. They do not want others to know what they are doing. So they're secretive, and they are. The result of this is you don't get any volume from an exchange. However, tick volume works. Tick volume is added to the price movement on every price tick up or down. And because one person may deal in, say, 5 million, while the very next trader only deals 500,000, we do get a tick for each deal. Bear in mind the number one principle, that from the tick volume created, 90% at least will be from professional money and their dealers. When these very large orders go through, they have a following, the same as the futures pits. This automatically creates more ticks, hence higher volume. So TradeGuider will analyze the tick volume as if it were real volume, and will clearly show this professional money either participating or not participating in the movement of a currency. When we hear of strength and weakness in a currency, this is nothing more than professional support or lack of it, and can be clearly seen in TradeGuider. Remember, in 1992, George Soros massively shorted the British pound, forcing the Bank of England to eventually withdraw from the European exchange rate mechanism. Well, this is just one example of smart money having a dramatic effect on a currency. This happens every day. You just need to know what to look for. And here is an actual chart. Look at the volume associated with Soros's attack on the market. He couldn't hide his footprints in the volume. And you can't hide your footprints in the volume. So let me bring in Tom. But before I do, I just want to show you that there is a real growing knowledge base out there that volume is a good proxy to be used in the Forex market. In fact, it gives you a massive edge. So this article, I won't read all of it because people coming on next week's course, next Thursday, some of you are already signed up, you'll get a copy of this. But I will show you what they summarized and what they said at the very end. Okay? He said, it is clear from the results illustrated that there is a definite and constant correlation between trade volume in any hour and the number of tick updates within that time. Okay, so it's basically agreeing. And it says conclusions, despite many varying arguments which suggest that price updates may not be highly correlated to actual traded volume, the correlation is actually very high. They were looking at hourly bars. I'm going to show you it's very high on a 4-hour chart. I'm going to show you today a chart of the euro. I'm going to show you the currency futures contract to the left, where we've got exchange traded volume. And I'm going to show you here the spot Forex contract, and the last signal before this up move was telling us to go long, and that's exactly what I've done. No supply in a rising market. Now with me is Rita Offen, who trades these signals very successfully. They're called upthrusts, and we'll bring Rita in to explain why she likes that signal so much. It's a signal you can trade against the trend. Notice the same signals have appeared in the spot Forex market here, and at the same time exactly in the currency futures contract. You can get a very big edge in the market if you use the two contracts together, and I'll tell you why and show you why that happens. Because The spot Forex market moves about 5 seconds quicker than this, which enables us to get in. When this large move began to happen, it happened over here first. You've got to be quick. It's 2 to 3 seconds. But if you use a 1 minute chart, as I'm going to teach you, you will see you get a big edge. And this happens about 8 times a month. It's where I make my most money. Only 8 times do you get these big news events that make these big moves. And you could literally just trade in the Forex market 8 times a month and be very, very profitable. So without further ado, let me introduce you to the man that invented volume spread analysis. Okay, his name is Tom Williams. And Tom is going to talk to us, and I'm going to teach you in this next section after Tom has spoken about arbitraging. But what we'll do is we'll leave these 2 charts up because Tom thinks we're seeing a shakeout in the euro. How can it be that the European Central Bank reduced their interest rates and the euro rallies? Well, beware of the news. A lot of people were thinking of going short the euro because they were anticipating a down move. We can show you that our signals correctly predicted no supply in a rising market, and the market's been marked up. Ladies and gentlemen, Tom, you were a former syndicate trader, an insider. You invented this volume analysis, but I get so many emails. In fact, in the Forex Factory chat room, there's nearly now, I think, 20,000 threads on volume and volume spread analysis. And people just don't think you can use volume as a method to make money in the Forex market. I know that's a lie. I know it's wrong. What's your view of that?
Right. Yeah, hi everybody. Tom Williams here. Thanks, Gavin, for that. Right. Now, the mystery, of course, if there is a mystery, is that imagine you are Bank of America, say, right, and you want to do a deal. Now, it's obviously to your advantage if your activities are more or less undercover. In other words, you don't want other people riding on your decisions and making money from your movements in the market. So what's one of the best ways to prevent this? You do not tell what the volume was. You do not tell the opposition that will be fully aware of what you're doing exactly the activity that's taking place. Is it high? Is it low activity? Is it average activity? And so on. So that's the obvious reason why you don't get recorded volume. And remember, there's nobody out there that's going to help you.
Except us.
Except you.
Except us.
Except Gavin says us, which is true. However, on saying that, that's the reason why there's no official volume. Right? So all you've got to do to look at a chart in progress, just look at the price spreads and whether it went up or down, and no volume. However, we've got over that by using what we call tick volume. Now that means every time there's a price change, the volume is recorded from that price change. In other words, activity. When there's lots of price changes, then the activity must be high. Right, and that's what we use. And it's delivered to us, all done, packaged nicely by eSignal and other companies like that. And thank you very much. That's a great help for us, because VSA won't work unless it's got some sort of volume to look at, activity. Okay, because what we do, we look at the volume, and on that volume or activity, we ask ourselves, what did the market actually do on that? And that's where the analysis comes in. In other words, we have a signal we call end of a rising market, for example, right? And lots of people look at you blank and say, well, how can you tell when the end of a rising market's coming? Well, to understand that, you have to understand that there's, Gavin calls it smart money or professional money. These are people that trade, think nothing of trading 4,000 or 5,000 contracts, and they'll throw that into the market. Other professionals see what they're doing, and they may follow, and so on and so on. And on the back of that activity, right, what did the actual market actually do? Which is the question. Now, the end of a rising market, if you're a professional operator, try to put yourself in their shoes and you will understand it more. If you have bought, which we can show you how they do that, on the lower prices, shall we say, right? But then once you've got a profit, and you can see that the chart's gone up, right, there will reach a time when you want to unload your holdings. And to unload your holdings, because there are no friends in the stock market anywhere, right, you have to unload as the market's going up. Because otherwise, the floor traders who want to stop you making a profit, even if you're a professional trader yourself, right, they would do their utmost to prevent you making a profit so that they can make more profits, right? So you have to unload your holdings since you bought lower as the market's going up. And the obvious way to do that is some potentially good news is going to appear on the horizon. Now, you'd be very, very naive if you thought for 1 minute that the so-called professional money or the smart money, right, were not fully aware of what the impending news was going to be. And I know that in most cases, the stock exchange or the members have actually written that news for them. And I know they check with the stock exchange before they announce anything serious. And the Federal Reserve is going to make an announcement in a few days' time. You'd be very naive if you thought that information was not fully available well in advance. So you want to unload, and you know that, say, some potential good news is appearing. So when the news is announced, they ram the market up as far as they can, right? And hopefully this attracts buyers in. And then as the outsiders buy, you sell to them, unload your holdings. And what happens then, if you look at a chart, it's usually gapped up on the news. At the end of the day or period you're looking at, the spread will be narrow, up bar. Now, the reason to be narrow, because every time a buyer comes in, hoping for higher prices on the back of the news, professional money is selling, right? And that caps the top end of the market. It's like putting a lid on the market. And at the end of the day, you then get an up bar on a narrow spread. And if you see that's been gapped up into fresh high ground, right, and the volume's high, that's the best shorting position we have, or one of the best, shall we say. And but that's how we analyze these markets. And I think it's very, very exciting for you. If you can get your head around these charts, we've got loads and loads of information, recordings you can listen to. Even we've got 3 books, I think, between us, or 4. Get your head around that, and you will have that information with you for the rest of your life. And you will never, ever regret it, I can assure you. And it's the charts never lie. They can't lie, because that's the how it works. Now, you take, for example, the news. I mean, the most remarkable news I ever listened to was, of course, when the planes crashed into the Twin Towers, right? And then when you listen to the news, right, after the market had been closed for a week and it reopened, it plummeted down, the market. If you looked at the chart, it was down on very, very heavy volume, right? But when you switch your TV on or the news, you had these 2 grim-faced reporters looking at you from behind their desk, and they were telling you how many billions, not millions, billions of dollars worth of value has been wiped off the market. And they even had the president talking that you're either with us or against us, and there's cells of the enemy all over the place, and so on and so on, right? And listening to all that terrible news, and with all the selling going on, lower prices were inevitable. That's what they were telling you. However, amidst all that, suddenly we had a green buy signal. And people said, well, how can that be? That's impossible. But the reason is that the television company that were giving you all this news did not understand how the market was working. And if they'd have been more observant, right, they would have seen down bar, massive volume, right, closed in the middle, was that if, for example, which they claim they do have, reporters on the floor of the New York Stock Exchange, right, the idea of that is they tell you all this on their T-Money program, giving you the impression if anything's going to happen, you're going to be the first to hear about it, which is a load of nonsense, actually. But if they had a proper reporter on the floor of the New York Stock Exchange, they would have said, yes, everything they just told you is true. However, right, all the professionals here are buying everything they get their hand on, hold of, frantically buying. And that's going to make the market a strong market, not a weak market, as all this news is inferring. And that's what happened. There was a strong rally which went on for some time after that, and that's the reason why. There was a huge shakeout. Professional money absorbed all the selling, and that makes the market a strong market. And shakeouts will create higher prices. We saw a shakeout early when this market opened. Well, what time did the shakeout happen, Gavin? About
1 o'clock.
1 o'clock.
Just after the news was released, yeah.
Yeah, and they mark it heavily down, only to reverse rapidly. So you can't. So they trap as many people as possible into poor positions.
But interestingly enough, our software picked it up before the news.
Oh yeah, but the software does, because it's looking at the activity of the so-called smart money, and they can't hide that. And it's unusual if VSA doesn't pick up most of the tops and bottoms. As a matter of fact, if you crawl through all the different time frames, practically every top and bottom's picked there somewhere. Okay? And people don't suddenly, even clever programmers, they say, well, this can't work on all these different time frames that you claim it does. But it does, because all the different time frames are just simply the same picture, each one showing either strength or weakness. And I describe it something like a doctor. If you're a doctor in a hospital and you've been given a patient that's got some serious cholera or something, right? You treat the patient, you examine him, right? Now, it doesn't matter how frequently you check up on that patient over the next few days or week even, right? It's not going to change very dramatically. And that's why supply and demand works on all these different time frames. And it's a fascinating subject. And once you get your head around this, you'll be so excited. And that's why we have hundreds and hundreds of people, because this hasn't been on the market particularly all that long. And if you get your head around it, right, you'll be one of the relative few people in the world that can do this. It's not difficult. As a matter of fact, I find it quite easy, and Gavin does too. Once you get your head around it and realize that you're looking at the activity of so-called smart money, these are people that trade vast amounts relative to what a normal trader would do.
Yeah, yeah, and the euro's doing the same thing. So let me explain then a little bit about why this chart here, which is on the CME Futures Exchange, is working in tandem, almost directly, look, with this to the right, which is spot Forex. And I just got someone just typed in, why is the market going up here? Because here, look down here. Now, when I look at the volume at the bottom of the chart, anyone here notice very high volume on the bottom of this chart here, and also over here about a week and a half, 2 weeks ago? I'm now going to explain what this is and why it's here. See here and here? And that is on the 17th of April at midday. Look over here, okay? 17th of April, and in fact we can see that the widespread down with the volume is at midday, and on the very next bar we have a signal, okay? And it's exactly why this market went up. Now, interestingly enough, the email that I got yesterday, and you know who it's from, said, Gavin, I couldn't work this out. I bought your software, I looked at the news, and it said the euro is going to have really bad unemployment numbers, which it did. It's going to be in serious trouble, and then I see a shakeout going on, and that tells me to buy the euro. But I looked at the news, Gavin, and everything telling me to sell the euro. And in fact, when I looked at my technical analysis as the market was falling, it was telling me, it was giving me sell signals. And yet Trade Guide was telling me on a big time frame, professional money are beginning to accumulate the market. And then over here, we had a test, and the market rallied. Now, that same customer had a signal 8 hours ago. The news came out in Europe here that the unemployment numbers here were terrible, but professional money clearly knew something because they're not selling into the down move. So we knew 8 hours before the shakeout that this market was very likely going to rally. Now, what do they do on the news? The news comes out, we're cutting interest rates. The price begins to fall. So everyone goes short. But look what happens. The market immediately reverses and makes a high. This is how the market works. Now, a question was typed in, Gavin, this is amazing. How is it then that an exchange-traded contract, which is going through an exchange, can be almost identical in the shape of the chart to the spot Forex contract? Because there's no exchange. It's simple. We're looking at activity. Here, these ticks, there's a lot of ticks on the way down, creates high activity. The same over here. Now, why is it the two have to move together? Simple. It's called arbitraging. They have to move together. The market is arbitrage. Now, I'm not going to explain all of this now because I'm doing a two-day course on it. But suffice to say, when we see indications of strength or weakness, you will notice very clearly that when I'm trading, I always pay attention to the biggest time frame. Here's a currency futures contract. Here again is a spot Forex contract. It's the same signal at the same time. And it always will be, which is why I use both charts together. So clearly the US dollar is the key. It represents about 62% of the world's foreign exchange reserves. Okay, so everything you want to buy, especially oil, is priced in US dollars. And we can see here that it is the major currency to follow, which is why pretty much most of the big currency pairs that are traded against the US dollar. So it is key for the following reasons. The United States is still the largest economy in the world, although China's catching it. The US dollar is still the reserve currency of the world. The United States has the largest and most liquid financial markets in the world. The United States has a very super political stable system. The United States is still a major military superpower. And of course the most important one is basically the US dollar is the medium of exchange for many cross-border transactions. For example, oil is priced in US dollars, and it still is. So if a country wants to buy oil from Saudi Arabia, it can only be bought with US dollars, which is why it's such a powerful currency. And you can see here that it represents about 62%. Now that's changed, it's greater than that now. That particular schematic is now 2 years old. It's actually increased. Another good example, look, why does the news fool the trader? Simple. I mean, here's a great example, one that I traded. France loses its AAA rating. Okay, that was in January of last year. So I looked at the chart on this day, 13th of January, and lo and behold, look at the volume on that day. Okay, a massive volume. It's a down bar with the next bar closing higher. Well, we call that climactic action. It's a chance to get ready to buy, but that's not actually where I buy. I actually buy on the third green diamond after we see that signal, which is right there. Because I then know the market, as soon as it goes across the top of that bar, is going to improve. Now, let me go back to the chart here. One of the signals that we look at, which actually came in a couple of days ago, on the 1st of May, yesterday, was an upthrust. And several of our customers did trade that short. And in fact, you did the right thing, because today, when the news came out, initially it meant down. And I use something called a chandelier stop. And a chandelier stop moves down with the market. Okay, so it moves down. Now, if we go to a different time frame now, you'll see how, using the scanner in Trade Guider, we can see what this Euro chart actually did. So you go to the hourly chart, okay, we already know that we've got a down move that happened here. But in the background here, we've got everything confirming what people are doing here. The smart money have begun to sell here because they're going to buy it back at lower prices. So how do you trade into fast-moving news? Well, look at the signals that came in on the 15-minute chart. Prior to the big up move, we've got indications of buying, not selling. So we know that we've got stopping volume. We can see here we've got a 2-bar reversal. But that happened very quickly. So what do? We go to a 5-minute chart. And we say, okay, now we've got all this movement going on in the market as these big volumes come in. There will be some great trade setups to happen over the next 2 or 3 days because of this big volume bar. Nevertheless, as you can see, one of the signals that you could have been traded already here was no supply, because it's telling us they're trying to mark this price up. And interestingly enough, if we look at the futures market in America, I've been looking at whether the S&P is likely to rally. Now we have supply coming in, which means here professional money may be marking this up artificially so that everyone thinks that the stock market is a good buy today. It may actually be a trap, and we've got to be extremely careful of that. So let me go back to that chart of the euro, and I'm going to ask Rita to come in if she's around there. I think she's there, yeah. And I'm going to get Rita to talk about this signal here, which did in fact move the market down for about 24 hours. But this red line is something we call a trigger number, And these upthrusts, once you know how to trade them, and there is a special method of trading them, is a very key signal when it's in the right place. And that's the key to it. It's got to be in the right place. So ladies and gentlemen, you can sit here. Ladies and gentlemen, let me introduce you to Rita Offen. Now Rita lives in Worthing on the south coast of England. She trades pretty much regularly each week. She's not stuck to a computer every day because she's got other things to do. But she knows when a market is going to reach a certain critical level. And then she looks for certain signals, and her favourite is the upthrust. And it's a very key signal, because when we look at the universal law of effort versus result, this signal shows us there's a lot of effort, but a very negative result in the price. And I'm sure Rita will be happy to give you a few tips on the best way to learn how to trade the FX markets using volume spread analysis. So ladies and gentlemen, please give a warm welcome to Rita Offen.
Hello everybody. Gavin's talking very confidently about me, but yeah, well I know Tom Williams and have done for a few years now, and I'm very privileged to be able to sit with Tom quite a lot and pick up quite a lot of his knowledge, and I'm very grateful to be able to do that and to be in that position. And yes, okay, well the upthrust is one of the VSA principles, but it is a very powerful VSA principle, as Gavin says. And here it is, as Gavin, here's the signal of an upthrust. And what we're looking for in an upthrust is we need to see weakness in the background. That is very, very high volume on an up bar, as some sort of indication that that professional money have been selling. And we see this here, and we must always look into the background. Now, I've seen upthrusts that haven't worked, and quite often the reason is because there's strength in the background. So if you see an upthrust, it's not an automatic signal. You've got to see in the background that weakness, and then that's a definite sign of weakness, confirmation in upthrust. And what happens is the price is pushed up, and the reason that happens is they're taking out stops of people, plus they're encouraging people to go long. And quite often it can be a very rapid up move. People get excited and they start buying and buying, and then only to fall down on the low. And volume can vary on a bar like this. It can be very, very high. It can be quite low sometimes. But the principle is the same, that it's been marked up and it's come right down only to fall on the low. Now, for myself, now Tom Williams would say he'd short that straight away. Myself, I tend to look for some sort of confirmation of that weakness, which would be an up bar on very low volume, like in what we call a no demand. And I might look for that in this time frame. I'll look for it in another time frame, just some sort of confirmation that the market is weak. So that's how an upthrust works, and it is a very powerful sign of weakness. And if you're just starting out, it's a good idea to perhaps look at your charts and look out for things like that, because it's a good thing to start on.
Second question.
Yeah?
What advice do you give to people who are trying to learn volume spread analysis? What's your advice to them?
My advice to people who are trying to learn volume spread analysis. I would say you need to read the books that are out there from Gavin or Tom, and you need to read them and read them. What I did was I identified through the books every setup there is, every VSA setup and principle. I even drew them in a notebook for myself. Drawing and using your own hand is quite a, it's good. It imprints the patterns in your mind, and learn those principles. Then start looking at the charts and looking for these principles and trading with on a demo account or something to confirm to yourself that you've understood. Plus, I mean, I've watched all the videos in the VSA Club. Surround yourself with other people who are VSA users as well. And I think the biggest lesson for me has been, even though I learned all the VSA principles, I then came across my own failings, and my own failings being I was impatient. You've got to be really patient. You've got to be prepared to sit and wait for these signs to come along, for these VSA principles to come along. And when they do, your trading really will take off. You've got to be patient. You've got to be disciplined.
Brilliant. Thank you very much indeed, Rita. Thanks very much indeed, Rita. We appreciate that. Okay, so now let's go and have a look at some key things to do with the Forex market. Now, what I'm going to show you now, and this is important, is how do you use different time frames to identify when there's a big opportunity coming. Well, first and foremost, one of the things we did yesterday, and for those of you that were in yesterday's mini mentorship course, which went really well, we took a couple of trades, we made money, we saw the market move, we knew it was going to move because we knew the Federal Reserve were going to release the money into the market. How do we know that? Well, we have inside information, really. We know exactly where to find where the big money is coming into the market, as we can see here. They actually, in April, put in $45 billion into the market, and they will do the same in May, and we know which are the 4 dates they're going to put the money in. So we know in advance exactly when to trade. I mean, that is exactly when you don't have to sit and wait. We know the 4 days of the month where the market is going to take off. We know that. Because we as VSA experts know that the market moves because the big money move it. And who is the big money? Clearly, the Federal Reserve has got quite a bit of money to print. $45 billion went into the markets in the month of April. And yesterday and today was when that money was coming out of the markets, as we can see. So quite clearly, we can identify the patterns left on the chart. Now, have a look at this chart here of the Euro 4-hour chart. And let's look at why the market's going up. Because down here, you've got two signals, here and here. Okay? This is the day that the big money, okay, the 4th of April, was put into the market. Okay, there was a considerable amount of money put into the market there. You can see, there it is, 3.75 billion. That was obviously used to accumulate, and this is what we call Yao Ming. A Yao Ming bar is the highest volume that we see. This is one of the strongest setups that I will be teaching in the course, because one of the things we look for is areas of support where professional money show their hand, and they show their hand very clearly. So I'm not in the slightest bit surprised that today we've had a shakeout. It's not at all surprised. But as Rita said, you could have taken a great short trade yesterday, because what they were doing was marking the price up through here to catch any longs. They then trapped everybody and have bought it back, and now we've seen the result. Now, we've got to look very carefully at what this bar is going to tell us, because it hasn't closed yet. So you can't analyze the bar really until it's actually closed. But if it, on that volume, you can see it's going to be very high. It'll probably be as high as this. If it closes up near the high, then we're going to look for what we call a test or no supply in a rising market. And we can see we're in an uptrend, because if I draw my trend channel from my Yao Ming bar, which I'll be showing, and we can see perfectly good channel there. If I then put on what I call the playing field, which is really defining where price is going to go, I can clearly see that at the moment we're finding support at the moment on the bottom edge of the channel, as you can see here. So it's holding price at the moment on this line here. Now, the only time I'm going to be really interested in getting long at the moment is when we penetrate this line and test it, because then we've got a really good leg up on the euro. And I actually, okay, Paul, I just saw your question. Sorry, I can't keep up with all the questions. There's too many. So please, forgive me if I've missed your questions. There's just been too many. Let's just have a quick look. I'm trying to look. Carlos, drop me an email and I'll help you on that one. I just saw your comment about all the documents that I'm showing you here. I will be providing as part of the course that we're doing. We're actually doing a specific course on, and it's only for Forex and currencies. It's not going to be for stocks or anything like that. In fact, let me give you the link. We're doing it next Thursday. Oops, don't know what happened there. There we go, that's better. Yeah, we're doing it next Thursday. Tom and I are going to do it together. Basically what we're going to do is we're going to specifically dedicate this course to trading the currencies and the Forex markets together. We're going to do live trading, so we will trade live. We've done the course to coincide with some more money that's coming in with the Fed. Okay, and what we're going to cover is the 6-point trading strategy that Tom uses for trading Forex, because there are 6 key things that he does to identify when the smart money are moving into the market. We're going to look at some more advanced techniques, specifically how to trade springs and upthrusts, because a lot of people have asked me, you see them in the Forex markets, but you don't know how to trade them. It's a very clear technique to do it. You just use 4 time frames. And once you use them, and you use them correctly, you will see when a market is going to spring, which means it's going to move up. Obviously, we'll show you this live as well. So we're going to be doing live trading just like we did yesterday. Yesterday, we had a full house. We had 50 people. We took 2 trades. Both trades were shorts. Both trades made money. Both trades actually turned out to be trades, had I stayed in them longer, would have made more money. But we still made money, and that was the key. We're going to show you why so many traders actually, especially retail traders, decimate their accounts by making bad decisions, not realizing that the news is not going to help them. And what we're going to do also is I'm going to give you my trading plan for Forex and help you develop yours. So specifically, one of the sessions with Tom and I will be how to write a Forex specific trading plan. Now, for those that haven't got the software, we're also offering an opportunity for you to own any one of our plugins or the real-time software as well. We've said here it's the MT4 add-in, but if you wanted Trade Guider, we could do that for you. And that includes the course price as well. But the actual course itself is $297, Fred, you asked. And basically, that's all the details there of what we're going to cover. And if you want to click on the purchase price there, it takes you straight through to a web page. There we go. Which basically, there it is, 397, I beg your pardon. And the first 20 people that ordered pay just 297. And for those who haven't got the software within that price, you can have any one of our software products for a whole month as part of that. So if you want the RT program that I'm using or the end of day program that I'm using, then no problem at all. We will provide that as part of the course. It is limited to 50 places, yes, because we use GoToMeeting technology. And let me just put the link in here. A couple of people are saying, where's the link? I will put it in the room now. That's the link there for the for what it covers. It's a 3-part course. Yeah, it's over 3. It's a Thursday. It's on Thursday. Yeah, we're doing it on a Thursday. That's correct. I'll put the links in here. And the first 20 orders will just pay the 297. Yeah. Okay, good. All right. I'm asked, am I only focusing on the 4-hour time frame for the euro? Absolutely not. No. Actually, the euro, I'm using this as an example. The 4-hour time frame, the reason I use it is because it picks up very nicely the big volume, as you can see. Right, we can see down here, look. You get a very nice signal called a shakeout right here. So we see it. It picks up the Yao Ming volume very nicely. And we're going to get the equivalent volume here. Now, I can't analyze that bar. But what I then do, Alan, is I go to the scanner, which we showed yesterday, really. And we showed that, look, we're looking for confirmation of the trend in different time frames. Well, at the moment, we're in congestion. See all these white diamonds? That's a no trade zone at the moment. Now, you might be able to get a trade on a 5-minute chart, but I wouldn't even try now. We will get this reaction to this volume tomorrow. We've got news coming out. We've got unemployment coming out. So we will get the news. But most importantly, we know when the next batch of money is coming into the market. Okay, this was what happened in April, and they changed the dates in May. And for those who come on the course, I'll provide you with the link to show where you can get that information. I will also provide you with a number of things. You'll get this PowerPoint presentation that I've been using, which shows all the setups, as you can see. So this is a PowerPoint that I'll be using in the presentation, which will explain the various setups that we use for Forex. And then there's a number of handouts that I'll be giving for you to take away with you. Specifically, what I'm going to show you is a number of things. There's an interesting letter. There we go. These are the ones I also, if you're in Poland, you would have already got these. But basically, very interesting article here from Tim Raymond. And Tim is one of our customers. And what you're going to notice here, someone asked me, how much money can I make trading VSA and Forex? The answer, sir, is I've got no idea. I have no idea. I really can't tell you. What I can tell you is we've got numerous customers. One of them is in this room. His name is Richard Dingsdale, who now works with us, who has done very, very well. And in this instance, what we saw is Tim Raymond, who won, not once, but twice, the Forex Currency Trading Championship. Okay, he got 44% gain on his account in the second competition. He did better in the first. But what did Tim do that others didn't do? Very simply, he believed. He says, in 1998, Raymond had the good fortune to connect with Tom Williams, the creator of volume spread analysis. I rang him, and he was very reluctant to sell me his software, he said. He said, trading is very difficult, you know. I insisted and agreed that I would pay £5,000, that's about $8,000, in installments, Raymond says. These days, if I'm asked by someone who is starting out in trading for advice, the first place I send them is the Trade Guider website, which is my website. For me, it demystified the markets to a great extent. So another example of one of our customers that have done very well would be Earl Ehrenler, who again entered the same competition but trading futures. And these articles we can provide you if you want to read these. And you'll see here he talks, Ehrenler talks about the Wyckoff method, and he won in 2011 and 2012, sorry. He came second, I beg your pardon, that's correct. But most importantly, he talks about how he became a professional trader. And he says, in his studies of the markets, Ehrenler came upon the book Master the Markets by Tom Williams, which of course is Tom's book. He began using the methods from this book in June 2007, and he credits his reliance on this approach, which includes Wyckoff theory, as one of the reasons he began to see consistent profitability in his trading. So you can change. Yes, you will get a copy of Tom's and my book if you haven't got it when you attend the course. Yeah, I think we did put that on the website. I believe maybe he didn't put it on there, but you will get a copy of the books, yes. Absolutely. Someone said, can you tell me the dates again? Yeah, it's the May the 9th and May the 16th. It's a Thursday. It's for a reason. We've chosen Thursday for a reason. Okay, and each session will last about 3.5 to 4 hours. There'll be theory, live trading, trading plan, and practice and preparation before the trades. And we will only be looking at currencies. So not that it makes any difference, because the setups we teach are relative in all markets. They're relative for the stock market, the futures market. But in this instance, we'll be looking at two key markets. We'll be looking at the euro, and we will be looking at the Aussie dollar, and we will be looking at the British pound, and we'll be looking at the currency futures and the spot forex. Okay, just to be clear. So we will be looking at both. Okay, let's have a quick look. Good. Excellent. Oh, good. I've seen some of you have come in already. So what I'm going to do, let me hand you over now to Richard Dingsdale. Richard, are you there? Just see if Richard's there. Crikey, they've marked that one down quick, haven't they? Yeah. Hello. Hello. Yeah, this is going around. It's going like a yo-yo. This one, isn't it? Look, Tom.
I've just been scalping it.
Have you? Tom just said to me, Gav, you want to get short there on that signal, and I'm like, oh no, Tom, I'm teaching Tom, and he went, you'll regret it. He's absolutely right. He's going, we should be short here. They've marked it up artificially.
Well, yeah. I was down $25 when I spoke to you last. I'm now up 100. So happy Christmas.
Yeah, nice. It's quite interesting today, though, how they do that. I mean, you look at this bar, and you know, clearly there, when Tom looked at the next bar and it's closed lower, he said, well, that can't be bullish, can it? I said, well, no, it can't. And it hit this trend cluster, which we'll talk about. So, Richard, just briefly before I hand over to you, because there's too many questions for me to answer, so maybe you can get to some of them. You were a customer of Trade Guiders. You brought the software several months ago. It's changed your trading, so you can talk about that. But most importantly, you've adopted some other strategies in NinjaTrader that you use. And I think it'd be nice today, for the next 25 minutes, if you could share some of your ideas. I've got to go to a meeting. We've got a hedge fund meeting, so I've got to go there. But what I'll do is, as I say, I'll ring you afterwards. But Richard actually represents us, and he's got a wealth of knowledge about the markets. And we also have in America a great trader called Ken Yee. I don't think Ken's in the room, actually. I can't see him. But Ken is also, if you're in America, in that area, he's a great trader, or Canada. He can help you as well. Is Ken in the room? I don't think he is he? Richard?
I don't think so. I've not heard him or spoken to him this morning. So.
No, okay. Well, we'll put his email up as well. Perhaps you could do that if you've got any comments or questions.
Yeah, if anyone in America needs help, we can put Ken's email up.
No, he's in the room, but he hasn't got a microphone. So there you go. Ken is also a great trader as well. First club. Both these guys that help Trade Guider, both very, very experienced traders. So if you've got questions, and I'm sure you have, about the right way forward, if you want to learn, just like Tim Raymond did or Earl Ehrenler, how you want to learn this method, give the guys a call. They're very busy, but they will give you their time. And yes, the course that we do is fully archived. It's recording, and we'll send you out all the handouts that we're using. There's about 50 sheets of information, and you'll get the PowerPoint slide. that we use as well. Tom just said to say goodbye to everybody. He's going to go and have his lunch. And from me to all of you that are in the room, thanks very much for taking your time. I hope that you learn this, and we hope that we can help you understand how the market moves. Remember, if you can know in advance when the smart money are putting money in the market, it's going to give you a massive advantage. And I promise you, I'll teach you that and show you that and trade it with you live. Thanks very much, everybody. God bless. Richard, over to you.
Thank you. Change presenter. Make me. Yep. I'm already showing my screen. Which one I'm going to show? Show that one there. Yeah. Okay, guys, we should be seeing a 60-minute and a 30-minute chart. Can you see that? We see some yeses, if you can see it. Hang on, let me just maximize the chat box. Now, I'm having a few problems with Ninja today because I've got 3 data feeds open. That's fine. Okay, fantastic. Okay, now there may be a retrace in this. Obviously, look, we've come down here. Let's put some structure to this 30-minute chart and see what's going on. Let's just hang on one second. I just need to show something else in a moment. And we want the. What do I want to move that? Okay. Okay, so I've been scalping this morning, just doing some little scalp swing trades, scalpy trades, not swing trades, scalp trades. And I'm actually up $75 as we speak. This is my live trading dome. And I'm just getting in and out for 3 and 4 ticks at a time. So I've had a few trades this morning. Not everyone's been a winner this morning, but I'm up at $75 profit for the moment on my live Infinity Futures account. And I want to show you my timing chart, which I've been using this morning, just to catch little 3 and 4 tick moves in the euro dollar. And so I have a 10-minute chart here. Then I've got a 5-minute chart. Been playing with this today. I've got the 3-minute and the 15-minute as well. But I've just been using this to just out of news to catch some moves. Now this is a live spot Forex feed from a company called Oanda, and as long as you've got funds in the account, you can actually open a demo account with Oanda and trade with them as well if you want to trade spot Forex. But I use it for timing because, as Gavin said, this is spot Forex on the black chart to the right, and the other 2 are futures Forex, so euro dollar futures charts. And often the spot will move before the futures, so you can get a little bit of an edge when these big moves are happening. Now I can't show you the live trades I've taken because of the dome. I've not got any Infinity charts up. The reason I use the Infinity dome, let me show you this, as compared to the Ninja dome, it's much faster. I have an account with AMP, and I use the Ninja dome. Well, I was trading with the Ninja dome, but I find it's not as fast as the. Let's put this up. Now this may crash Ninja, so I might have to start it up and show you something else. So there's a lot of charts open at the moment. So the one on the left is the Ninja dome, and the one on the right is the dome for Infinity. Let's make it both live here so you can get both live data. Where's the control center? For global simulation, let's take that off. Simulation off. And we'll make that live. So now we have 2 live domes from 2 different brokers. Now the one on the right is the Infinity Broker platform, and the one on the left is the AMP Futures platform. Both are futures. Now what happens in times of high liquidity, the Infinity Futures dome just seems to hold pace with the market. And can everyone see this chart? 60 on the right. Sorry guys, let me change screens. Let me change this screen. It may not work. Let's have a look. Where's this one? Okay, screen and monitor. Sorry everybody, can you see that now guys? Okay, you should be able to see 2 domes now and 3 timing charts I'm playing with today. Yeah, fantastic. Okay, guys. Well, I'm not going to go into deep questions, and I just want to go over a couple of charts with you, show you some stuff, and hopefully you might be able to take a trade out of it. So look, the one on the dome that I was talking about on the left is a live trading account with AMP Futures, and the one on the right is a live account with Infinity Futures. And I've made $75 in the Infinity one this morning so far, although I was down 25 when I spoke to Gavin last. So again, I'm only in for 3 or 4 ticks at a time, and I'm not that fussed if I don't take another trade today. Now, I've made $75, $100 a day is usually my target, so I'll be happy with that. If you can do that every day, which I said, well, 7 out of 10 days I do that, it's a good little, it's a good living, it's an earner, you know. And then as your account grows, you can then do 2 and 3 contracts at a time. I'm only doing 1 contract at a time. But you can actually put these trades on 2, 3, 4, and 5 contracts at a time. And then you can, even at 3 and 4 ticks at 5 contracts, you only need 2 or 3 ticks a day of that, and multiply that by 10 or 20 days a month, and you'll get some good wages out of it. So again, look, here we are on the 10 minute and the 5 minute and the 1 minute. We've come down here on a 5 minute chart, and let me bring this over. Well, let me look at that screen. At the moment, there may be a retrace move. Look, we've come back to fair value, which is the 800 on the 15-minute chart. Now, the 15-minute chart, if you're looking for a longer move here, let's go out to a 4-hour chart and put some structure on it. Now, this may crap out on me, guys. If it does, we're going to have to bite the bullet and say goodbye, but I'm hoping it won't. Just because I've got a lot of data open at the moment. So this is the 4-hour chart Gavin was talking about. Obviously, we've got the principles on here. Now, these lines you see are trigger number lines. Now, the red lines are the top of green candles. Now, you can put the close of the candle and the bottom of the candle, but for this chart, I've just done the tops of the candles and the closes. So the red dotted lines, if price, over here, for example, this is the top of the market, more or less here. If price closes below that red dotted line there, we're looking for a short. And what's it done? It's sort of a Wyckoff spring in reverse here. Look, this is a big shakeout on news here. That was a big shakeout candle just there. Sorry, this one. That's a big 4-hour shakeout candle. That's over 100 points, which I'm going to break down in a moment on smaller time frames. So again, to break this down on a smaller time frame, let's have a little look. Let's put a line on here. So this is the 4-hour chart. Okay, there's a 4-hour chart. That's the news that's come out and the big shakeout move. We've got 4-hour trigger number lines. Let's put maybe a line on there because that's quite crucial too. Let's put a trigger number line on this. We'll do a copy and a paste. We want to do this. We want to unlock it. Okay. Now the beauty of Ninja Trader, when you click on these lines, you can actually lock them in place. So watch. If I want to if I lock this now, hit OK, and I say I've done some drawings, I'll put some sort of semi-trend lines in. Oh, look, we're trending down there. We've trended up here. We've broke that trend. We're looking for support here, for example. Where are we looking for a pullback, maybe to come up and test that to come back down. So if you want to clean all this off, all you do is go here and then do remove all drawings and just select all. It takes it off, but because we've locked the trigger number lines, they stay in place. So again, there was a short up there. That was a short that Gavin was, I think that's an upthrust. Let's have a look. That's a potential buying climax. Now that's a 4-hour potential buying climax. Let's put a line on that and we'll see what we get from there. We'll break it down to see if we could have traded that line out. Now this is for you longer term traders, and then we'll have a look at the scalpy charts in a bit. So let's have a look. Okay, so let's go down to a 60-minute chart. Okay, now we're on a 60-minute chart. And again, relevant Yao Ming volume to the 60-minute chart for the last couple of days. Realistically, this now becomes a key level, this line here. So what we're going to do is unlock that one. Okay, and then move it over. I want to put this line at the close of that candle. Because when price breaks below that, what are we going to do? We're looking for sells. And what's it done here? It's done it once here. It came down and tested this. Now there's a long off of that line for the test. And then look, it's came out and shaken everybody out. There's the big shakeout. Look at that. What a shakeout. And then boom, it's just sold straight through it. Now you could have put a stop and reverse order in here for a sell trade once it broke that trigger number. And again, at the moment we're on an hour candle. Look at that. That one there is ultra high sell. Again, we can put another line in here. We can put a ray line to this candle here. We'll put the close of that candle. If price goes back above here, we're looking for a long. So that's how you work the trigger numbers. Look, ultra high sell volume. You know, there's like buying at the top of the market here, selling at the top of the market here. It's a big shakeout, and then look, it just drives from what time? 1:30. It's being driven. So let's go to a 30-minute chart. Okay, 30-minute chart, guys. Remember that line we put on the 4-hour? Well, it's up here. Look, that move. Sorry, I should have showed you on the 60-minute. Let me show you on the 60-minute chart. So we've got potential buying climax on the 4-hour chart. You now go down to a 1-hour chart, and that line is here. Look, so it's in the space within the space of that 4 hours. What are we getting up here? So this morning, but this is the 1 o'clock news. So we've got supply coming in on the way up. Then we have a supply coming in again. Yes, we will have two supplies coming into the market. So as we get into the top of the market, supply is hitting us and it's stopping it going any higher because they're selling into these candles. Okay, so let's go down to a 30-minute chart and see what we get now. In fact, what we'll do, no, we'll leave the line there because it's on the 4-hour chart. Let's go down to a 30-minute chart. Okay, 30-minute chart. Let me just so now we're on a 30-minute chart, and again, look, so we're still at, what time are we at now? That's 15:30. Let me go back, hang on. Let me go back out to 240. I just want to lock that line in place when it's moving. So let's do this. Yeah, lock it. Okay. Go back down to a 30-minute chart. So here we have that line on the 4-hour chart. So this is a 30-minute chart. So let's bring this line now to the high of this market. Okay, we're going to bring this over here and lock it onto the high that the price has made for the last date, the last 24-hour period, technically. So let's start reading what we're getting as we're going up to the top of the market. Now look down the bottom. I use stochastics and RSIs for confirmation of VSA. So this is how you use it. Look, we're going overbought as we're going up to the top of the market here, okay? Bear in mind this is 2 o'clock yesterday afternoon. So let's read what the principles say going up to this level, this high of yesterday's afternoon. So we've got supply coming in here. And we've got supply coming in. What was that? There's no result from effort to rise. And again, look, top of the market starts to roll. So we've got supply coming in at the top of the market, and we're overbought on the stochastic, overbought on the RSI. What are we looking for? The crossover out of the RSI for a short. And there we get it. So let's break this down to a 15-minute chart now. So this is how you break this down on the lower time frames and look for trades. We'll have a look, see if there's a trade coming out of this on the lower time frames in a minute as well. So let's look at the 15-minute chart. Okay, same line. So again, we're still reading up to the market. Look, we're climbing on decreasing volume. What happens? It starts to sell off. So let's read what they say on the 15-minute chart, see if we're getting confirmation. So we're getting supply coming in there. Supply coming in. Then we're getting an upthrust. But again, we don't short an upthrust in a rising market, do we? We want confirmation first. So what do we do? Let's look at that upthrust. You can put a line off of this upthrust and use that for confirmation. I sometimes do this when I'm scalping. So we've got an upthrust on the way up the market there. But look what happens. We make the high, then we come back down and we test the upthrust. What's that telling us? There's a good short potential there. And the stochastics drop in. And let's read what this one says at the top of the market. Supply coming in again. So let's go down another time frame. Let's go to a 10-minute time frame. And these are the time frames I use. These are 3, 5, 10, and 15 minutes. Yeah, that's a good question, Martin. Are smart money making euro down today to buy cheaper tomorrow during non-farm employment change? Yeah, there's manipulation being done as we speak. Basically, it's being marked down, There's a non-farm payroll tomorrow. If the number's good or bad, it's going to have a big reaction either way. So what we're looking today, it's marking down on purpose, possibly. There's all this money coming out, so there's money being injected into the economy, into the dollar economy. So let's see what's going to happen. There's a potential long trade here at the moment. Setting up. Let's have a look quickly, see if we can see one. For any one of you who are trading live, there's a potential stopping volume there. This is a 10-minute chart. Let's look at a 5-minute chart. This could be a live trade you could take right now. So down to a 5-minute chart. Takes a minute to load. Okay, yeah, so we've got stopping volume. Let's read what these say. So we've got ultra high climactic volume there, stopping volume. Then we've got test after a shakeout. Now your entry will be above this candle if you're going to go long here. You want confirmation on it. Again, shakeout, so it's still being shaken out. Sell volume's decreasing, disappearing. We're overbought on the stochastic. Now this is a 5-minute chart, no supply here. Again, I'd want confirmation with a test or a no supply test confirming this to go long. So there's a potential entry here if you was to go, let me get rid of that. There's a potential entry here on there. If it breaks above there and gets confirmed, if it breaks above here and gets confirmed, there's a potential long up to test resistance or even to test the sign as an example. So there was this is the more recent shorter time frame close of that shakeout candle. So let's go down a time frame. Let's take some days off of this data series. Let's put 5 days on that. It'd be quicker to load. Right, so let's have a look. So we're on 5 minutes. Go down to 3 minutes. Okay, here's the 3-minute chart. Let's read what they say. So we have a no supply and no supply. Again, the no supply is failing at the moment. We're still pushing downwards. So what we're looking for at the moment is volume to come back in to the upside. But look, volume's decreasing, the market's falling. So at the moment there's no effort to stop the market. We want stopping volume like we saw here, and again there's no stopping volume here, so it may well push through this line and go to the next levels, which our next potential stopping target would be 130.51, and then maybe look for a retracement out of there. So if it breaks this level that it's stayed to for the last 15 minutes, there's potential for it to hit and test off of 3051 and 42. So there's 2 stopping levels here for it to price to get to. So at the moment there's no long trade in there at all, and then there's no confirmation for a long trade anyway. And then 1-minute chart. So look at 1-minute chart. Sam, with regard to your question with NinjaTrader, try reloading all the data and reconnect it. So if you right-click on the chart on NinjaTrader, you can actually do this. I'm not going to do it because I've got loads of charts open. You can click on this and reload all historical data. Now I do this every morning when I open up the charts. So I open up the charts before they all come onto the screens, they load, and then I reload all the data so it's fresh data. Otherwise you can get gaps and you won't see the closes of some bars. Now I know on the daily charts on with Ninja you do get the gaps, which I'm not too keen on. But again, you can the 4-hour charts you don't get the gaps, and on the weekly charts you don't get the gaps. Now looking at this is now on a 1-minute chart. Let's have a look what this is saying. So again, look, climactic volume to come down here. Let's start putting some lines on for you. Line. Now this may crap out on me, guys. If it does, we're going to have to kill it. Again, so we've come down here on decreasing volume. Look, ultra high climactic volume, sell, sell, sell. Made a low. Let's read what these say on the 1-minute chart now. So this should be stopping volume. Yeah, so this is no potential climactic action, even better. So we've got potential climactic action here. Then we've got 2-bar bottom reversal. Yeah, so there's strength that's being supported there, but look, it's just broke out of that line. Again, I'm looking now for a test of this level down here. It's broken out there. Unless this is a shakeout, unless this one it immediately comes back, it's still potential to the downside. We've been trending down all morning. It's been sold off since the news came out at 2 o'clock, and we're still pushing down. So I want confirmation. There's still no trade for me either way at the moment. There's no confirmation downwards to it, and there's no confirmation upwards to it. So at the moment, we're sort of in a no man's land of a trade. There's no trade here, and it's pointless trying to jump into a trade just for the sake of trading. I want confirmation to get in and out of these trades, so I've got a high probability of winning them. I mean, even if it's for 3 or 4 ticks at a time, that's all you're looking for. Let's just bring this up. And today I've been very cautious. I've just scalped 2 and 3 ticks at a time off a few trades and just testing it out. I mean, I've just opened my new Infinity account, so I'm testing the dome today, to be honest, and it's quite complex. So there's quite a lot you can actually do with this dome. You can do simple brackets, you can do trailing stops, multi-brackets, multi-trailing. So you can have different triggers. If you're going up in price, for example, you can have different triggers, and at each level you'll trigger another. So it's how you scale into a position. You can have trailing stops with multi-trailing, where you actually keep triggering in contracts, or you can do it in reverse. If you're in profit, you can take off contracts. So say you put 5 contracts on, you can go up 3 ticks, take 1 contract off, you're still 4 ticks into the market. And you can keep doing that until you're out of the position altogether. That's how the big money scale into positions. So I just wanted to show you that. So again, the 1 minute chart, no, there's not a trade there at the moment for us. So let's go back to the 30-minute chart and analyze that trade where we put that line. So here's a 30-minute chart, 2 o'clock yesterday, and we're going up to the top of the market. Let's look at the 15-minute chart for the same thing. And again, we've got supply coming in at the top of the market on the 15-minute. And then let's go down to a 10-minute. Now, as you go down in time frames, you will get more principles. So yes, you can always find a principle to trade on a 1 minute chart because there's much more information coming at you. Now, what it is with this stuff, when you're learning it, you have to learn to apply your own mental filter to some of this stuff. Yes, there are a lot of signals saying there's weakness coming in, but the market's still climbing. So you know you're not going to go short in a rising market. So although these principles are saying there's signs of weakness, the market's still climbing here. So take this, you don't want to start thinking, oh right, there's a red triangle, go short straight away. It doesn't work that way. You have to look at price action. You have to look at what time, if there's any news announcements coming out, if it may affect price action, and then you have to trade it accordingly. And again, look, it's made a high here, and then volume starts disappearing to nothing. So when the volume starts disappearing, that's what you're looking at. You're not just looking for these little triangles to trade them. You're looking at the volume down here. The key part of all this is this. This is what you're looking at, all down here, this bit. What's going on down here? This is where the contracts are being exchanged. And again, with spot forex, this is where the tick volume is being exchanged. It's transactions. So again, it's what you're looking for. You read that along with the candles. So there's a 10-minute, 5-minute chart, same line. Where's it gone? Come back, 5-minute chart, same line. So again, we've got a bit more confirmation on the 5-minute chart. This is more tradable for me. So look, we're coming up, and we're going up on decreasing volume. We've made a last push here, and then it disappears to nothing. And again, there's no effort to rise anywhere through here. So where's a good entry through here? So we come down, it gets supported here, and again, it comes back up. This is your entry here for this trade. Watch. Supply coming in right there. And then what's this one here? No demand. Yeah, that's a potential entry right there. You could have put your entry below the no demand and waited for it to come in, or you could have took the no supply. That also looks like an upthrust candle. So it doesn't have to say upthrust. You can say, you know, by looking at that candle. Let me just move this out of the way. You know, by just looking at that candle, they're selling at the top of the market. It's trying to climb on decreasing volume. Look down here. So it's trying to climb on decreasing volume. Down here, look. It's decreasing. It's climbing on decreasing volume. There's your entry. So you put your entry there. You put your stop just above here. The program's even got the stops on. This is my live trading screen, so this is how I trade it. You can actually see the stops in place. So you've got your stop there, nice tight stop. That would have been good for 10, 20 points maybe. 10, 15 points, there's a 15-point trade. Now remember, the markets move generally in 15 to 30 pip moves. And then when it's really hauling, it'll go to 60 points usually. I mean, we've done a 60-point move from there to there this morning, so as an example. And then 3-minute chart, let's look at a 3-minute chart here, see if there's any better confirmation. Yeah, Gillian, we're gonna. There's no trade. I've just did that. There's no trade for me at the moment on the euro dollar. I'd want confirmation. I'm not here to trade live today. I'm here just to support Gavin and show you guys how to trade. I'm not here to trade live today, but if I see an opportunity that I really like, I'll take it. This is a 3-minute chart. There's a shakeout. That could well test to the upside. 3-minute chart. Yeah, that could be an upside move there. There's a shakeout. In fact, let's put a contract on. We'll buy one. There you go. Happy Christmas. So we're in a trade now. We're in the trade now, and we're hoping for it to go long. I've got a 10 pip stop in this trade. I'm going to tighten up the stop because I don't really want to be in for a loss today, so let's tighten that up. If it comes down to 64, let's take it a few back. We'll take it back. 12.50, we're in profit at the moment. We want it to push. 25, yeah, 37.50. I'm going to cancel that out. Flatten it. So now we're $112 up for the day. So there's a live trade for you in the market. That's the scalp for you. Nice and quick, in and out. $37.50. Thank you very much. Happy Christmas. So again, that is a scalp move, guys. You're in, you're out very quickly. You saw how quick that was. I was in, 3 ticks, done, bang. And then best thing about this is when you're doing 4 and 5 contracts at a time, you're at 50 to 100 pounds a point. Happy Christmas again. So again, this is the type of stuff I do every day. There was a confirmation. Yeah, look, again, remember we're downtrending all for the day, so we don't want to be in this trade long. In and out nice and quickly. That's how you do it. That's how you scalp trade. Yeah, I do currency futures, Peter, because they move a bit more uniformly. They're not as, especially with the timing chart of the 1-minute spot forex, you get a real good read on the market. So that's why I prefer the trade currencies. I mean, I've traded the euro for years, so I specialise in it. I'd rather specialise in 1 or 2. How many? I've had about 6 trades today altogether, mate. Carlos P. So. And I'm now in for 112 profit for the day. That's me done for the day now. I've done my $100. So again, look, you could have stayed in it with a stop just below here, but I just wanted to show you how the scalp works. And again, you could have stayed in. It's probably going to come up here and test. Realistically, this is going to come up and test here. This is what we're looking for. So again, when Gavin does the next session of this mentorship course, I'll be on it as well with him, and there will be scalp trades in it, and I'll be highlighting some. I'm not saying I'm going to trade live, but if I see something come up, and I think there's a valid entry as there was here, yeah, it's worth going for. Now, I use a 3-minute chart for execution a lot of the time, just to get in and out of these little scalper trades. And again, let's look at a 1-minute chart of this. Let's see what happens on a 1-minute chart. Remember, you get a lot more principles on a 1-minute chart, so this is how this works. Again, so look, we've made that low. This is technically a Wyckoff spring and test. There's no principles on here, but remember, we don't need principles to trade, okay? You don't need you do need them, but you don't need them to actually physically take a trade. You can't say, oh, there's not a green triangle there, I don't want to go long, or you can't say there's not a red triangle there, I don't want to go short. You're reading the candles, the triangles, the volume, and I use these indicators. Well, look, the stochastics for me, that was a confirmation for me when I took that little scalp, because the stochastics crossing out of oversold, as well as the RSI. Now, if we make these a little bit bigger, you'll get a clearer picture of them. Look, the stochastics crossing over here, and the RSI, we've actually got divergence on the RSI, so it's a good long trade. That may be good for 10 points. It may well continue further up. Again, I would want another principle in here somewhere saying that that test is going to pass, that the entry is above this test. And again, if it's going to come up, but then you've got to look, where is it going to stop to? Well, look, it was up thrusted here. This is the next stopping point. So if it goes to there, what could it do? It could well bounce down to here to test these lines. I think it's going to push down further today, but we'll see. I mean, it's found a low here for the day. but it may well test lower. Let's just get rid of all these. Okay. And again, there's a potential short in there now as a scalp on a 1 minute chart. Middle 20 period moving average, go out to a 3 minute chart, see if there's confirmation for a short. And let's have a look. Let's reboot that. You've still got the up thrust again. That's why I took that trade out quickly just in case. So there is, I'd want confirmation. We're still trending downwards. A little trend, a counter trend scalp is ideal, but again, there's nothing there for me at the moment. Okay, guys, so that's basically how you scalp, or how I scalp. I use obviously the principles. I use multiple time frames for analysis. So on my main trading chart, I've got this in a 1 minute format usually. So let's go to 1 minute. You don't have to have a spot forex chart, but I do, because as Gavin says, I use it for timing a lot of the time. I use a 1 minute, a 3 minute, a 5 minute, and a 15 minute if I'm longer term trading. But this just syncs with what I like to do. I'm in and out, as you've seen, very quickly. $30, $40, $50 a time, 3 or 4 of those a day. That's all you need. Yeah, speed trading with race to rich. Yeah, that's right, Tom. Yeah, I don't want to sit in the front of a computer all day. I was done at 10 o'clock this morning, really. But again, I wanted to show you how it works. You can find these trades all day long using VSA, and you will find them. And if you study this stuff, if you study our course material and work at it, you will become successful and you will become profitable. All right, guys. So I just want to leave you with that. Have a good afternoon, the rest of you, and you'll see us all soon.
The organizer has ended the session, and this call will be